And I'm personally delighted to be here for the third conclave, having been here at the first and the second. So it's been a real pleasure to see these develop over the years. But first, let me start by passing on the apologies of the World Bank Country Director, who unfortunately had a prior engagement today. He passes on his best wishes for the event and is looking forward to seeing and hearing all of the ideas on this exciting and growing area of activity in India. I'd like to thank our hosts, the PFRDA, and my fellow speakers this morning, Mr. Contractor, Dr. Bhandari, Ms. Kapoor, Amish Mehta, Suchindra Mishra, and the Chief Guest, the Honourable Minister of State for Finance, Sri Santosh Kumar Gangwar. So to prepare these remarks, I look back at what our former Country Director, Honor Rule, had said at both the first and the second conclaves. So some things are as pertinent as ever. India is still living through both the demographic dividend and the demographic challenge. This makes the creation of a sustainable and broad-based pension system one of the most important opportunities. And I was pleased the earlier speaker mentioned the importance of a multi-pillar system. There is literally no country in the world who has solved all of the challenges of pensions with only one pillar, be that public or private. You need a mixture of everything. And whilst some of the other figures showed the declining role of the family, I think it's an important thing for India to remember the role of the family, and it's actually a great advantage that you have that maybe some other countries have let slip whilst they're thinking how to deliver secure retirement income into the future. So whilst we all know the number of young people entering the labour market every year is very substantial, we've also heard that the population over 60 is growing very quickly and is set to rise from 116 million in 2015 to over 330 million in 2050. So the dividend exists, the demographic dividend, but it must be channeled quickly into an expanding pension system if India is to be able to reduce old age poverty. And some colleagues did an important analysis for the East Asia Pacific region. And there's a great chart there showing how quickly countries have gone from having 7% of the population over 60 to 14%. And whilst some European countries, that transition happened over 50, even 100 years, other countries are doing that radically quicker, with I think the leading country in the world being Vietnam, doing that transition in 15 years. So the challenge here in India, as in other countries, is to be able to do a better job than other countries have done and to do it more quickly. But I'm pleased to say that since the first and the second conclaves, we can already see things changing in terms of the energy and commitment to expanding pension coverage. And there's an increasing list of the advances that are a testament to the commitment of the PFRDA and the Government of India and some leading states. And of course, all of those who provide the outreach, the administration, the investment and the payments, the providers of the pension system in India. Changes led by the PFRDA and the government in the areas of improving products, processes, outreach and publicity. So reduction in minimum contributions to the NPS, introduction of fully digital and paperless enrolments, whether through eMPS or into the APY and the NPS through the bank branches and associated business correspondence. Changes in tax relief announced in the last union budget. They all go to show there's a serious reform agenda. It's important because we know the challenges are vast. As we heard, pension coverage is around about 12% of the workforce, almost exclusively in the formal sectors of the workforce. And the real challenge is to tackle coverage in that 85% of the informal sector. I think in global terms, this is probably the biggest global challenge of countries all over the world. And I think India has the potential to show a leading role here. And whilst there are impressive numbers in terms of the millions of people covered and the billions of rupees or billions of dollars in assets under management, of course, everyone knows in the Indian context they don't translate at the moment into broad enough percentage coverage. So it's encouraging to see the desire to go yet further, to further improve the way products can work for the informal sector, to expand the digital and the paperless vision to create the new concept of auto-enrollment that Mr. Contractor mentioned even for those without formal employers, and to increase the attention to publicity and outreach. Mr. Contractor mentioned work in, or reforms in the UK and New Zealand. We've actually just finished some reforms in Turkey to introduce auto-enrollment. And already within the first year, there's an extra 1 million people receiving pensions. They set up their voluntary pension system in 2003, about the same time. Already another 1 million people within the first 6 months, and the cost of delivery cut by 100%. Because if you go to an automatic model and a group model rather than individual, you can vastly improve the market structure and the cost dynamics. It's also why we're encouraged for the potential to bring to bear the amazing successes of the PMJDY program in terms of financial inclusion. There's, to be sure, Guinness Book of World Records for new bank accounts and new insurance cover. We know that pensions is more difficult, more long-lasting, more important in my view. And we're confident that the successes in other areas of financial inclusion can be replicated in pensions. But it will need that same level of intensity at all levels of government, from the regulators, from the unions, through the states, through to the local areas, to transform what's the most difficult part of financial inclusion into broader and ever-increasing coverage for the informal sector. During this project, I want to thank SBI Bank for helping us with piloting ways to improve coverage in Delhi and Shimla, and to show how even on a small pilot you can dramatically increase enrollments in local areas, testing with real customers and real branches. I'd also like to thank Mr. Babu Ahmed, the district collector from Vijayawada, with whom we've been working along with Andhra Bank to show how a concept of leveraging the fair price shops, leveraging so many of the other reforms like direct benefit transfer, can be used to the advantage of financial inclusion, opening bank accounts, but also opening pension accounts, showing the truth that you can solve the final mile, bring access to pensions literally to the village level, but to go further than a typical financial inclusion initiative and learn that pensions has much to learn from financial inclusion, but financial inclusion has much to learn from pensions. Because if you solve the how of getting someone into a system, that's only half of the picture. And what the Indian unbundled architecture gives you is a real opportunity of the what. What does a good pension system look like? What does a good pension look like? And as Mr. Contractor said, it has to be incredibly low cost to be useful for ordinary people, to transform small balances into meaningful returns. So combining financial inclusion and pension coverage are vital. Finally, I want to say a few words about the wider benefits of pensions for the economy in terms of generating assets for long-term investments like infrastructure, and some words about supervision and particularly the role of the PFRDA. In theory, the long-term horizons of investors with pension assets can match the demand for long-term assets from investors, particularly in areas like infrastructure. But it's not straightforward, and it doesn't happen in any country without strong policy and regulation, and a focus on ensuring good governance, scale, and expertise in those people who will be doing the investment. Clearly, there's a huge demand in India and in other countries for this kind of investment, and we hope that the pension sector will be an increasingly important provider of such capital in the future. The greater the scale of assets under management, the more the investment managers are able to dedicate the expertise to find and do the due diligence on good products. And we hope that the improvements in some of the investment regulations and the growing scale going forward, allied with government action to allow investment into the particular vehicles which will enhance investment in infrastructure, help create the environment which over time will build the matching of pension assets into infrastructure assets. To get all of these elements to work together, to bring together the objectives to expand coverage, improve investments, and ensure the security of assets entrusted to the NPS and the APY is a sacred duty of the PFRDA. We've been working very hard together with them to ensure the regulatory and supervisory model can be upgraded and constantly improved to deal with these ever-broadening challenges in this ever-deepening market. This area certainly doesn't get the same limelight, It rarely features in the Guinness Book of World Records, but in my view, it's one of the most essential parts of a modern pension system. And it's an area in which the PFRDA has shown a leading role to ensure it focuses on the key risks to delivering good pension outcomes now and in the future, and to have a dynamic approach whereby the interaction with stakeholders in the market isn't just what's in the law this year and last year, but it's what are the risks to achieving those objectives this year and next year, a proactive risk-based approach. The Indian pension system and long-term saving market is still a complicated one, and the efforts to harmonise tax treatment are useful. The regulatory perimeter is one which is not often talked about but is very important, and I know is under consideration, so that as the report we heard outlined this morning can show, you can bring together the various parts, the lots of different ways of delivering old age income security, and make the system the sum of the parts more than the individual components. So with that, I'd like to pass on again our thanks to our hosts, the interesting insights from the distinguished panel we've just heard and throughout the day, and we hope the World Bank will continue to be able to engage and support these developments to come. And we look forward to our giving our insights, but also learning from the experience in India, which certainly as I work with countries across the globe is one of the most sought after and one we're very pleased to help expand to other countries. Thank you very much.